Disclaimer: 2018 to 2020, Trump's trade war with China, tariffs on hundreds of billions of dollars of Chinese goods, headlines screaming about standing up to Beijing, both parties talking tough about bringing jobs back home, the entire political establishment united in saying, we're finally going to fight back against China. The rhetoric was relentless. Every morning, the headlines dominated by escalating confrontation, as if every coffee cup and television screen carried the same urgent warning. America was at odds with the rising superpower to the east. News anchors debated fervently, politicians shouted from the floor, and analysts parsed every statement, every tweet, every press conference, as though the very fate of global commerce depended on it. International markets shuddered with each announcement. Investors reacted, sometimes overreacted, to a narrative carefully crafted for maximum tension. Yet behind this wall of noise, something far more significant was happening, something almost no one noticed. The narrative of confrontation, the spectacle of tariffs and threats was merely the surface. Beneath it, the quiet, methodical, and enormous flow of capital was reshaping the global financial landscape. During these same years, BlackRock, JP Morgan, Goldman Sachs, and the rest of Wall Street quietly moved $1.4 trillion into Chinese markets. Not a $105 billion, not an incremental trickle. $1.4 trillion, with the peak year being 2020, the very height of the trade war. Think about that. While every headline screamed conflict, trillions of dollars were being quietly funneled into the country that America appeared to confront. The contrast is staggering. The political theater played out on cable news, social media, and government briefings, while the architects of capital executed their strategy with near surgical precision. Now you might think this was a mistake, bad timing. Perhaps Wall Street got caught off guard by the political posturing. Wrong. This was not a mistake. It was predictable, more predictable than almost anything in modern financial history. Because there's a pattern that has repeated itself for over 300 years. A pattern so reliable, so mathematically precise, that once you see it, the entire story of what's happening to American economic power becomes crystal clear. This isn't theory, this isn't speculation. It is history repeating itself with surgical precision. And right now, we are squarely in stage 3 of 4. The global financial system is not random. It is not chaos. It is a meticulously designed machine, built over centuries, running on a 4-stage mechanism that has destroyed every single reserve currency in recorded history. Every single one. And yet, populations continue to be blindsided year after year, century after century. Stage 1, financial elites create a monopoly on money printing through a central bank, control the flow of money, control the levers of economic life. Stage 2, use this monopoly to finance government expansion through debt. Economy appears robust, empires expand, nations feel invincible. Everyone believes they've figured it out this time. Stage 3, the system overextends, currency begins to lose value, governments lose control. Cracks appear, subtle at first, then undeniable. Inflation creeps in, invisible at the start, but relentless, eventually sweeping through entire economies like a storm. Stage 4, the crucial stage. The same people who built the system move their money to the next rising power before the collapse becomes obvious to everyone else. The population is left holding worthless paper, bewildered and unprepared. History is littered with these examples. Britain, Germany, America, after 1971, they all followed the same sequence. And it is happening again, right now, before our eyes. As Wall Street quietly pours money into Chinese markets, Washington continues to stage political posturing against Beijing. The headlines create anxiety, the public debates strategy, economists speculate, but the capital moves silently, invisibly, inevitably. Let's step back in history to Britain in the late 1600s. Britain was at war with France, finances depleted, national survival at stake. A man named William Paterson proposed a radical solution: create the Bank of England. The arrangement was deceptively simple. The bank loans the government £1.2 million at 8% interest. But the brilliance was not in the mechanics. The brilliance was in the design. The government created debt. The bank converted that debt into money that circulated through the economy. And the wealthy subscribers to the bank collected interest on the entire national money supply. Stage 1 complete. Within just 4 years, Britain's national debt exploded from 1.2 million to 16 million pounds. By 1815, after funding the Napoleonic Wars through continuous money printing backed by government debt, debt had soared to 885 million. The lenders didn't just profit, they owned the government. Every decision, every war, every policy became aligned with the interests of those who controlled the flow of money. The nation prospered, but only superficially. Beneath the surface, cracks formed. Cracks that would eventually necessitate the next stage of capital relocation. Stage 2 unfolded immediately. Britain built the world's largest navy, colonized half the planet, and its currency, the pound, became the global reserve standard. International trade ran on British pounds. Foreign governments held pounds as reserves. Its dominance seemed unassailable. Yet by the mid-1800s, the cracks became apparent. British industrial production plateaued and began declining relative to Germany and America. The cost of maintaining an empire began outpacing Britain's ability to fund it. Debt quietly climbed. Here's where the brilliance of Stage 4 is revealed. The same institutions that orchestrated Britain's rise began moving capital to America. Railroads, steel, factories, infrastructure. British money flowed into American expansion, positioning the next global financial center, long before Britain's decline became obvious. By the time Britain abandoned the gold standard in 1931, by the time the pound collapsed as the reserve currency, the architects had already rebuilt their financial system in New York. They had moved their money before the collapse. The stage was set. Stage 4, the repositioning of capital, was executed with surgical precision. It was not speculation, it was a repeating pattern of history. And now, in the modern era, we are witnessing a similar story unfold. Trillions quietly flowing into China, while political spectacle dominates headlines. Beyond mere numbers, consider the human psychology at play. Populations, distracted by the drama, rarely perceive the undercurrents shaping their economies. Investors may feel uncertainty, yet the truly significant movements, those that dictate the global balance of power, happen far from public view. Trillions are moved quietly, strategically, ensuring that when one empire falters, another has already been positioned to rise. The contrast between visible theater and invisible reality is staggering. On one hand, politicians argue tariffs, trade imbalances, and punitive measures. On the other hand, financial titans are quietly rebalancing their portfolios, placing bets on the next global power. It is a dance as old as modern finance itself, a choreography designed to maintain power, wealth, and control, while the public remains largely unaware of the true stakes. We can trace this pattern back centuries, from the Dutch and British East India Companies to the Rothschilds financing railroads in the Americas, to Wall Street quietly investing in China during what appeared to be a trade confrontation. History repeats itself, and the methods are the same. Manipulate currency, expand debt, leverage political systems, then quietly shift wealth to secure the next epicenter of global influence. Every stage, every movement, every transfer of capital has been executed with meticulous precision. This is not chaos. It is deliberate, controlled, and relentless. And the people at the center of these systems understand something the average population does not. History is a machine, predictable and unstoppable, and they are the ones operating it. The lesson is simple, yet profound. Public perception rarely aligns with the flow of real power. The narrative of tariffs and trade wars, of headlines and political posturing, is often a distraction. The real story, the one that determines the trajectory of nations and economies, is written in trillions of dollars quietly moving behind the scenes. Now, as the world watches headlines, debates policy, and speculates on the next geopolitical move, history is quietly repeating itself. And those who understand the pattern, who recognize the 4 stages of financial cycles, see with clarity what the rest of the world overlooks. The global financial system, despite appearing chaotic and unpredictable, is in fact executing a precise and ancient pattern. The stage is set, the players are in motion, and the results, as history shows, will be both inevitable and transformative. Second example, Germany after World War I. The Treaty of Versailles hit Germany with 132 billion gold marks in reparations, a number almost incomprehensible, an enormous debt that crippled the nation almost instantly. The Weimar government faced a stark choice: raise taxes to pay it or print money, and they chose the printing press. The Reichsbank, Germany's central bank, became the engine of an experiment that would reshape economic history. It monetized government debt, paid striking workers, funded social programs, and kept a fragile political coalition together. Every day, the Reichsbank expanded the money supply in ever greater amounts, hoping to maintain a semblance of stability while the nation teetered on the brink. Then, in January 1923, France and Belgium occupied the Ruhr industrial region to seize coal and force payment of reparations. Germany responded in a way that seemed almost surreal. They paid Ruhr workers to strike. Workers were compensated in printed marks, creating a feedback loop of escalating currency devaluation. By November 1923, the situation had become utterly catastrophic. $1 US bought 4.2 trillion German marks. Wheelbarrows of currency could not buy a newspaper. Workers were paid hourly, because by the end of their shifts, their wages were already worthless. Prices rose not daily, not hourly, but by the minute in some markets. The middle class, once the backbone of German society, was wiped out. Savings evaporated overnight. Families who had spent decades building financial security were reduced to barter and desperation. Yet here's the part rarely discussed. This wasn't simply a policy failure. Rudolf Havenstein, the Reichsbank president, deliberately bought foreign currency with marks at any cost, regardless of domestic inflation. Later records confirmed this strategy. The hyperinflation served a purpose. It eliminated domestic war debts, punished politically inconvenient social classes, and prepared the country for a major restructuring. When the crisis peaked, Germany introduced the Rentenmark, a temporary currency intended to stabilize the economy. But the solution required foreign support. Enter the Dawes Plan of 1924, bringing Wall Street into Germany to restructure the nation's finances. U.S. banks and corporations poured money into German infrastructure, industry, and banking, gaining massive exposure and influence in the process. Then, when the system collapsed in the early 1930s, creating the conditions that would lead to the rise of the Nazis, those same American financial institutions were already positioned for the next phase of international finance. The pattern was repeated, same mechanism, different century, but with the same predictable precision. The third example, the one that shaped the modern financial order, Bretton Woods. After World War II, the US dollar was pegged to gold at $35 per ounce, and all other currencies pegged to the dollar. Foreign central banks could redeem dollars for physical gold, a system designed to ensure global financial stability. For 2 decades, it worked. America enjoyed immense global influence. But then, as wars and domestic programs expanded, dollars flooded the world. Trade deficits grew. By 1971, there were far more dollars circulating internationally than gold in reserve. France demanded gold. Britain demanded gold. The system fractured. On August 15, 1971, President Nixon closed the gold window. The dollar became pure fiat. Since that day, the US dollar has lost over 98% of its value against gold. Now, fast forward to today. Trade tensions appear in the headlines, tariffs are imposed, and America claims it is standing firm. But beneath the surface, the same pattern repeats. China is added to global investment indices, institutional investors are forced to buy Chinese assets, and from 2018 to 2020, U.S. portfolio investment in China hit $1.4 trillion. BlackRock expanded operations, JP Morgan gained majority ownership, Goldman increased stakes. These are not accidents. These are precise moves in the machinery of global capital. Meanwhile, the U.S. national debt reaches historic levels. Central bank balance sheets explode. Financial integration accelerates under the guise of political confrontation. The trade war itself, the rhetoric, the headlines, all theater, designed to distract from the real story. Trillions moving quietly, invisibly, inevitably. You cannot fight China with tariffs while your largest financial institutions are transferring record amounts of capital into its markets. And yet, most of the American public doesn't see this. Just as the British population didn't understand in 1880, the German population didn't understand in 1929, the American population largely doesn't understand now. But the machine doesn't require understanding to operate. It executes. The mechanism is already in motion. Stage 4, the repositioning of wealth, is happening silently, precisely, inexorably. And here is the key. Those who recognize the pattern see it while it is happening, not after the collapse is complete. Unlike previous generations, we have the rare opportunity to witness the execution of this cycle in real time, to understand the sequence, to observe the transfer of global power, and to grasp the mechanics of the system before the consequences are unavoidable. This is not alarmism. This is history, repeating itself with mathematical certainty. The global system runs on predictable rules: control money, expand debt, overextend, and reposition capital. That's the machine, and the actors are already in motion. The lesson is both simple and profound. Watch where the headlines direct your attention. They are rarely where the action occurs. Follow the money, track the flows, understand the cycles. That is where true global influence resides. And for those willing to pay attention, willing to see the pattern unfold, the narrative becomes clear. The world is moving through another monumental financial transition. The players are the same in principle as those from centuries past. The tools are the same: debt, currency manipulation, strategic investment. The outcomes, historically, are inevitable. So as you reflect on the headlines, the speeches, the public confrontations, remember, the machine operates quietly, invisibly, and relentlessly. The final stage is underway. The transfer of capital, of influence, of global power is being executed as history has always dictated. If you want to understand how the machine was built, how it operates, and what the completion of this final stage looks like, subscribe to the channel. Stay informed. Watch closely. The story is unfolding, and this time, you can witness it before the collapse is complete, rather than trying to make sense of it after the fact. Like, share, and subscribe to stay updated on these patterns and the silent shifts in global power. The machine is moving. Will you watch it unfold or be blindsided like every generation before?